Welcome back to Higher Exchanges. I am your host, Jesse Redmond, Head of Investor Relations and Business Development at Leaf Brands. I'm joined this week and every week by Morgan Paxia. He is the co-founder of Poseidon. Morgan, what's going on, man?
I'm doing well. Back from a good trip to San Francisco, where was there for the last few days, and good to see that city is vibrant and good energy again. So it was a good visit. But
It
glad to be
wasn't
back
all
in San Diego.
it wasn't all feces and fentanyl.
No, no, no. Yeah. The media's I'm gonna call fake news on the media these days with their stories about San Francisco.
A little business, a little pleasure. I know it was Emily's birthday, and you may have been heading up there to hang out with her for a little bit, but a little pleasure, a little business in.
Exactly. So always a combo pack anywhere we go, it seems.
I know. I always try to do something for work as well, but I also do the opposite, where sometimes I have a work trip and I'll tack on a little pleasure to it as well. So can't complain too much.
That's right.
Well, Morgan, we are not here alone. We are joined by a fresh voice for higher exchanges, but a respected person in our world that I think many of you may know, or at least have seen his content. He is Mitchell Osak, CEO of Quanta Consulting. Mitchell, welcome to the show.
Pleased to be here. Thanks, guys.
Scale of 1 to 10. How did it do on your last name?
In English, 10 out of 10. In Lithuanian, about 4 out of 10.
Okay, give me the Lithuanian.
Moving on. What's your first question?
Come on, man.
What could I tell you?
Osak?
Yes, kind of. Yes.
All right. Well, we'll save that for the second show.
I'm 120 years away from that, so
Okay.
I apologize.
No worries. Well, I got to know Mitchell as just a bit of context here over the last couple of years. Been following his content. He has a great Substack. He's real active on LinkedIn, shares articles on X as well. So I got to know his content and seemed like a smart guy. And then we had the pleasure of hanging out a bit at Benzinga last year. And sometimes in our space, you know somebody online a little bit, and then you meet them and you're like, oh man, this guy actually doesn't know what he's talking about. And that's probably like 75% of the people that I come across. And Mitchell definitely falls in that other quartile where it's like, wow, this is a really smart guy who's done a lot of impressive stuff before cannabis and is now taking that knowledge and applying it to the cannabis space. So excited to have you on the show, Mitchell. Maybe to give us a little bit of context for today's conversation, can you talk about what you did before cannabis and how that got you into where we are now?
Sure. But first off, thank you for at least putting me in the top 25th percentile. I usually only get the top 75th, but I'll take it. To use a cliche, I would say I'm a seasoned business person. Very quickly, I have an MBA in finance. Spent my first 4 working years in brand management at Procter & Gamble, then owned, grew, and exited a tech company. Spent a lot of time in California, in Silicon Valley, in Orange County, around that. After I sold it, I ended up spending a lot of time consulting in financial services, pharma, CPG, and tech across North America. And I literally fell into the legal cannabis world in Canada in 2016, and I never looked back. So that's essentially how I got to where we are today.
And what was it that drew you into cannabis? Like for me, it was a combination of two things. It really helped my dad with his chronic pain problem. So I was like, wow, this plant isn't just fun to relax with at night, but it has a ton of medical value. So that opened my eyes. And then the other part, which is kind of naive and almost humorous in hindsight, was I thought that California going from medical to rec was going to be a great opportunity. And that all inspired me to drop the hedge fund stuff and open a dispensary here. So still glad I did it, but looking back, certainly the California assumption was pretty incorrect. So I'm always curious what drew you in? Like what about the cannabis space said, hey, let me stop what I'm doing before and take a look at this now?
My 2 reasons are pretty banal. One is I grew up in a sort of a cannabis community, a middle-class suburban Toronto cannabis community, but one in which my friends were petty dealers and growers. So I had a good sense of what cannabis was from an adult use perspective, and I enjoyed it. And I saw it from a perspective of, middle class to upper class, highly educated, hardworking people who actually used cannabis responsibly and hash as a wellness product. So the whole idea of the war on drugs which was up here in Canada, and some of the stigma was belied from the actual experiences I had within my family and my peer group in terms of how cannabis was being used. That's number one. Number two is my undergraduate degree was in military history. So I tend to look at things with a historical lens. There aren't many times in a business person's life when they get to see a new industry emerging, germinating. We've seen more of it in the last 30 or 40 years, but cannabis was an opportunity for something to come out of the shadows, a multi-billion-dollar industry in Canada. People estimate it to be about $10 billion. In the United States, multiply that by 10. So you don't see too many of those industries germinating and growing as quickly as cannabis is growing. So that was a very cool intellectual thing for me to see.
And looking back over the past, I guess, almost decade for you, any big lessons learned, anything stand out that, looking back, you say, wow, I didn't expect it to go this way?
I've made so many mistakes and had so many false strategic assumptions I can't count. Um, I'm willing to admit them, unlike a lot of people, but I think the biggest error I made, and I'm a conservative person at heart, was assuming the time to value and the time to profit and the time to reform and legalization was going to be faster than it ended up being.
Yeah.
I think in a certain cases, many operators could have mitigated some of those effects, and maybe we'll get into that a little bit later. But certainly, I thought we'd be farther ahead from a financial health standpoint. But it's great to see that there are certain markets, Canada being one of them, that are emerging out of the shadows and that are growing into a real industry. And I'm gratified to be able to see that. And to see that a lot of the basic business lessons that I know you guys have talked about it a lot, cash management, building real brands, communicating with trust, things like that are starting to take hold in our industry.
Yeah, I think something you said there really resonated with me, which I often think about that there's a fine line between being early and being wrong, and I think we're walking it. And I think in some ways we're tipping over to one side or the other in terms of potentially being wrong about some things. But has your opinion changed, Mitchell, in terms of the thesis? Like when I think about the thesis, I'll just say the U.S. cannabis thesis that it's a state-led growth story with these series of hard-to-time political catalysts, and eventually over some time frame we end up with 50 adult use states, or at least 40, 45 plus adult use states. We have rescheduling, we have safe banking. Somewhere along the way we pick up uplisting, and over a long enough time period we get federal legalization. So that's what got me into this. That's what got me excited about it. Was we had this TAM unlock, revenue unlock from all these new states, and then we have a lot of value unlock and more adoption through these political catalysts. But the problem is these things keep taking longer than we expected. Now we have rescheduling on hold, no signs of other reform. We're hoping to get Florida by now. We're hoping to get PA by now. And I think all of those things still eventually happen, but it sure is painful when we have the hurdles that we do now, and it takes it takes longer. Have you adjusted your thesis at all, or just the time frame under which it happens?
Uh, 2020 hindsight is always simple. I'm going to tell you, because I've run my own company that I bootstrapped with my savings and a little bit of money my parents gave me, and they had zero money and so on. I've always had the mindset about being a very, conservative consumer of capital and being a good steward when it came to reporting and so on. So a lot of what I preached for 8 years, and this included the go-go days in Canada of 2017, 18, 19. I've always told the same story. And the reason why I did that is I didn't know any better. I had no idea how to build a business other than doing it the old-fashioned way. Now, having said that, the question for me was always and remains always not if there will be reform, but when will be reform. And the when is a question that no one can ever answer. And I'm lucky in that I know a little bit around how laws are made in the United States, particularly in Congress. I know the partisanship. I know about executive orders and so on. And I know that you can't bet on anything until you have clear regulatory clarity, i.e. the president signs on the dotted line somewhere. So with that mindset, what I advise my clients all the time when they have capital is to be as miserly and frugal in its use as possible, because as John Maynard Keynes always said when he was asked about what happens in the long run, and he said, in the long run, we're all dead anyway. So there are great companies that in the US and in Canada that manage that way. As Andy Grove, the former CEO of Intel, said for the longest time, and Morgan, you would know this for sure, only the paranoid survive. I'm one of those paranoid guys who think that we always have to run our business like there will never be a dollar of capital for a decade, or legalization for a decade. And we build our business model, our capacity, our brands to reflect that reality.
Yeah, and Morgan, I'll let you opine on this, but maybe
Sure.
that's easier said than done in a lot of cases, because you look back to the early MSO days, and I think a lot of the mistakes were assumptions about how quickly things will grow. But why don't I toss it over to you, Morgan, to dig in a little bit more?
Yeah. Well, and certainly appreciate owning up to mistakes, because we've all made plenty. And I think it's good that we recognize them, because how do we learn if we don't recognize that things have not gone as rosy and as perfectly as we all imagined? And that's why I think we do a lot of these shows are trying to discuss how we've made it through this and how we continue to make it through this, because all we can do is learn and not repeat mistakes that were made of the past. And here we are. I miss a bit of those go-go days to a degree. I miss, the excitement. It was also a very frustrating time for us, because we just saw so much capital coming in and so much frothiness, and it was really distorting, and it was tricky, right? Unless you were, like a really flashy, like Mad Men kind of thing, where, people would just throw money at it without any questions around it. We were always very, that part was frustrating. And now here we are today saying, hey, look at what, good companies are doing. And I feel like there's, people's eyes just glaze over so fast. And it's just tricky, because we've really just as a sector have fallen out of favor. And I don't know how we get our brand back as a more interesting area to invest in. Maybe as things slow down macro, and there's some companies in the space that do have good prospects, maybe eyeballs will start to shift. But, as you think about where we are today, Jesse and I have talked about this quite a bit over time now, is, the winners and the losers, the bifurcation, those that are reform dependent, those are not. But how do you think about the landscape today, and how do you define winning in today's environment?
Well, that's a great question. In simple terms, in this kind of environment, with the capital availability we just spoke about, living is winning to a great extent.
Yeah.
And meeting payroll, and even though it's easy to opine from where I sit sometimes in the ivory tower or 10,000 feet above, and I'm not making that payroll every 2 weeks or so on. There are things that can happen in this industry, and you can call it luck or you can call it brains, whatever you want to call it, that can help some companies turn on a dime or close to a dime. So to me, fundamentally, a lot of it is winning, is living, is continuing to live. And part of the reason why I say that is that for anybody who's gone to business school or studied Michael Porter and the 5 forces of competition, like we are in that Michael Porter vortex of too many competitors with too much capacity, with too much undifferentiated product, chasing too few buyers in markets that have rapidly matured. That's another thing, if I had to, teach somebody in a new market outside of North America that was legalizing, what can they learn from North America? I would probably say your market is going to exhibit slow growth in as early as 14 and 15 months, which is what we've seen up in North America. So to a great extent, a lot of the cannabis companies, for good or bad reasons, are stuck in this Michael Porter-like vortex. And the only way out for many of them is to see their peers evaporate or consolidate away. We have to get to a situation where supply and demand is roughly in order. We have to get to a situation where margins have increased. I don't see them I don't see prices falling that much more in a lot of markets. So we have to take our pricing up. And I have some interesting thoughts how we can do that later. But until we get to a more fundamental macroeconomic position in many markets, and by the way, we're on that way in Canada. So we could talk about how Canada, in a way, is a petri dish for some U.S. markets. We'll never get through this problem. So it's almost like the bloodletting in the Middle Ages, where the patient has to be exposed to a lot of leeches and a lot of bloodletting before they can luckily resurrect themselves and emerge from the plague.
Yeah. So so let's just talk about Canada for a moment, and talking about some of the companies and that are making it through. What we see a lot of headlines on and financials around are companies like Tilray and Canopy that are just printing their way through it. Right? They're just able to issue as much stock as they need to shore up their balance sheets, or obviously at the expense of the shareholders. But is that a perceived as winning, or or what's winning in Canada right now, like for those that are dealing with that, right? Because to your point of like price compression can keep happening as long as they can keep printing stock and keeping probably prices below what is a true equilibrium, to your point of supply and demand balance, but they can probably keep supply at a depressed price longer while it is hurting the rest of the market. Is that a form of winning to you, or how do you think about it for the state of Canada?
Now, I'm going to talk about Canada only because it's probably, a couple of years ahead of where many U.S. markets will be. So that's why I like to look at Canada.
Yeah.
But I want to come back to one of the things you said, Morgan, which is this perception of our industry and the branding of our industry and why it's a problem. Canada is a perfect example of that by the names that you just mentioned. So when I define winning in Canada, and no disrespect to the Tilrays of the Canopies and the Auroras of the world, although Aurora is doing quite well now, those aren't the winning companies. The winning companies that I see are more of the mid-market, people like Canera, Rubicon Organics, Next Leaf Solutions. These are more mid-sized companies that are making profit, that are exporting into global markets, that are building clearly differentiated brands. And we could talk about what I mean when I say that, because I'm talking about real brand value, not logos or unaided awareness. I'm talking about distribution, brand premiums, and that kind of stuff. And that cadre in the middle, which I would say is probably 5 to 10 firms, some private, some public, are starting to get the recognition as winners. And some U.S. some analysts who I respect tremendously, and we could talk about it later. They're already giving a lot of peace and love to these Canadian companies. The problem is the retail investor community hasn't gotten around to this story, and I'm not an investor relations person like Jesse is, so I can't explain why that's not the case. But I do see the financial numbers, and I know they're strong.
Yeah, no, and I like this idea, because I do agree that we should be learning from the cycle that you guys started a couple of years ahead of us, and just trying to help tie it to like what we are seeing in the U.S. market now. People were getting really excited about like High Tide because of all the retail stores. Sundial or SNDL does have a lot of retail. They also have alcohol. People have tried to do very different things to make it through, but are there any metrics, like any profitability metrics? Like we talk about the MSO metrics ad nauseum, right? Probably over indexed to their gross profit margins, their EBITDA, adjusted EBITDA margins, their cash flow, prospects, things like that. But are there any metrics that you're seeing emerge from your cycle for some of those companies that you can share? You don't have to name names for, confidentiality reasons, but just kind of curious, what metrics are you seeing that are starting to stabilize there from a profitability perspective?
So I'm nowhere near having the financial acumen that you two guys have, and many others. I will say that I'm very operationally and business focused. So I focus a lot on gross margin, and I focus a lot on free cash flow, and I focus a lot on things like customer repurchase, in the case of a retail store, sales and gross profit per square foot. I'm very operationally focused. Return on assets is another one. Return on capital is another. So these are very old standing metrics, to your point. But things like adjusted EBITDA and so on, I don't tend to spend the time like a lot of financial analysts and like you guys do ad nauseum, digesting all their balance sheets and notes and so on and so forth. I look at how are they doing as a real business. And the problem I'll just throw out there is I pay a lot of attention to the quality of their data as well. I don't always believe the data they produce or the data that I read in Highfire or some of the other data sources. I spend a lot of time triangulating and validating the data that I see.
It's always funny too when guys like Mitchell, who are the smart guys, they come on and they say, "I don't really know as much as you guys do." Then they go and say 5 super smart things in a row.
Well, thank you. I'm going to tell my mother you just said that.
Yeah.
Um, yeah, I mean, I don't think most in the investor base in the U.S. are thinking about return on capital, return on assets, those are obviously great. Free cash flow is one that we do love because there's a lot of noise in adjusted EBITDA, right? I mean, there's just inherently a lot of games that can be played. And as a big fan of Berkshire Hathaway, what do you hear when you hear EBITDA? What would Charlie Munger say? Bullshit earnings.
Bullshit.
So
I just heard him say it again. Yeah, absolutely true.
Yeah. Never gets old. Never gets old. Curious, we've been getting hit a lot here in the US, or not hit, but trying to navigate this explosion of intoxicating hemp, or which most of it is just cannabis being called hemp for the sake of being able to flow freely around the country without regulation or taxation. Is that an issue in Canada?
It's not, because intoxicating hemp or synthetic THC, all of that is still covered under our Cannabis Act, which means it carries the same restrictions, access restrictions, branding restrictions as cannabis does. So we don't have the same Wild West that you folks do in the United States. That's to the detriment of our hemp-based businesses and to our LPs, who probably, if they had a chance, would bring up some of these beverages and products into Canada. But the restrictions are just too onerous that consumers can't take advantage of those products up here.
Jesse loves talking about beverages and cannabis. So
I like it from a business perspective, to be super clear. We had a clip a week or two ago when Colin was on, and Mitchell, Colin asked me at what price would I be a regular consumer of hemp derived beverages, and I told him when they start paying me $1 per can. And I went on to explain that I just think drinking things to get high is weird, and I like vaporizing flowers specifically. I've kind of got my own jam, and so it was just kind of a funny conversation with Colin. But I think it's super interesting from a business perspective. But not the form factor for me.
Yeah, that's one of the areas where. Sorry, go on.
I was going to say, and this is what's a great thing about Jesse and I, is I'm a fan of beverage. I find it as an enjoyable form factor. I don't appreciate the full complexity and of all the great cannabis. Like Colin's like this too. Like Colin and Jesse were, having a great conversation, really getting into it. And so one other piece, real quick, and I'll pass it over to Jesse, is how is it from an enforcement perspective in Canada? Do you see a lot more of clamping down? If just you say like it falls under this guise, but I mean, we kind of have this too, but there's been this big issue of just such a lack of enforcement. So people, the smoke shops just have no problem because no one's telling them otherwise. And there's no fear. Is that a problem, or do you guys, is enforcement pretty good there, I guess?
No, it's lame. I'm very hardcore on this issue. I don't believe a lot of the government numbers, because they're obviously self-serving, and they're politically motivated to reduce the apparent amount of product that is sold or consumed in the illicit market. In Canada, on average, the government will tell you probably 75% of all consumption goes through the legal channels, and they'll claim victory for that, even though the 25%, according to their numbers, is all lost revenue to the illicit economy for LPs and retailers that actually need it. So it's interesting claiming, it's like finishing in third and claiming you're a champion. I think the number is more likely in the illicit market, probably around 40%, 40 to 50%. I think it's way lower. The problem that we see here is obviously a lack of enforcement on storefront. It goes in spots and then these stores reappear. Down the street from me, and I live in a pretty middle class, upper middle class neighborhood, we not only have illegal cannabis storefronts, but we have illegal psychedelic mushroom storefronts. So that should tell you something. The other thing that we've seen here that, I preach all the time to my American brothers and sisters in New York, and they're dealing with this. And again, Morgan, you're from there, you would know it, is that when the government and the police department start enforcing the storefronts, smart illicit market entrepreneurs just go online.
Totally.
And our government might do a pretty good job of closing down the storefronts. They can't close down the illegal online stores. So who knows how big it is? I see what comes into my neighborhood from different places because I'm very good friends with our postman. I have no idea how big it is, but I know it's still substantial. And I know at a certain point, there just isn't the money or the will among our different levels of federal government and provincial governments to really clamp down on this. And it's sad to say, but it's a reality.
Yeah. No, we're same boat for sure. We were just talking about like Arizona last week, and Arizona is going to ban, and they'll probably close the stores down, but they have no way of doing anything with the online activity.
Right.
So it doesn't really do much. And those that are the legal, licensed, regulated, taxed, it's just a burden they bear, and it's robbing growth away, and it's tricky for the customer. So yeah, it seems like we both have more to learn on how to effectively combat that, other than just, price alone should not be the driver of conversion to the legal market. But Jesse, how about I pass it over to you?
Yeah, it's a good transition talking about disruption, or even maybe the way I want to frame it in the next segment here is differentiation, because I really can't think of too much disruption from a cannabis company lately. And Mitchell, when I think about disruption or even differentiation, when I think about the recent success stories in the U.S. market, the names that stand out to me are names like, Grown Rogue was a real darling there for a while. Glass House has had a really strong, couple year run. And those models tend to focus on low cost, having a competitive advantage there. We're trying to do something similar to Leaf with planting this big sun-grown farm about an hour from where I am in Santa Barbara. Glass House is about an hour the other way from Santa Barbara, so kind of a hotbed here now for big sun-grown cultivation. And it seems like, Mitchell, with the low costs we're seeing, I don't know how much lower costs go. It depends on the market, but I don't think they're going to go a lot higher. So I think we're kind of looking at the landscape, or things get a little bit cheaper depending on which market you're in. So certainly controlling costs, but doing so, as Morgan was saying there, while still providing value. Like, just because if something's cheap and it's shitty, the cannabis consumer is so sophisticated and picky these days that you actually have to provide a lot of value. We're seeing that in California. Glass House has done well with Glass House Farms flower, but now they have the Allswell, which is a cheaper machine trimmed eighth, which goes for less than $10 out the door. But still, if you're looking for something clean that's going to get you high, is a pretty compelling product. So I use that as one example that I see. I don't know if that's disruption. Maybe that $10 eighth is disruption, but at least differentiation. I like your perspective, Mitchell, because you know Canada and you also know the US. So when you look across your landscape, what do you see companies doing well to either disrupt or at the very least differentiate themselves?
Okay, like yourself, I find the term disruption a bit of a cliche and more fitting of like something like tech or pharma than it is cannabis. I think cannabis in general, until we get to biosynthesis or or CRISPR, and some of the innovation that can come from genetic engineering, I think we're in a singles and doubles industry as opposed to home runs or changing the rules of the game. There are certain brands or companies that I've seen that, for example, are trying to push the boundaries of the conversation and differentiation. One of them, for example, Rubicon Organics in Canada. You know them, Jesse. Morgan, I'm not sure if you do. Their organic brand, they've always gone for sort of mass premium or craft style mass production. They are doing things exceptionally well with that kind of position. That's one example. They're, Decibel in Canada. I think got the idea of infused pre-roll out of the United States, reapplied it and perfected it, and overnight, seized 50% of a massively growing pre-roll market in Canada, with a value proposition. I got to tell you, approaching 40% THC, where I thought, how much mileage is this going to have in the marketplace? Well, it took off. So I see some of those opportunities for certain companies that are very forward thinking. All the exporters, in terms of Canadians that now ship into Australia, Israel, Germany, and other parts of the EU, and even like Curaleaf that have bought European assets. These are, in my humble opinion, forward-thinking strategies and investments that sort of differentiate these firms and sort of expand the competitive boundaries for them. Curaleaf last week, created a hemp-only cannabis, a hemp-only store in West Palm Beach. I think that's a very interesting execution. I wrote about that today. I think it's bang on the money, and it'll be interesting to see what the results from that store, if we'll ever find out what they'll be. But I think that might be the beginning of something from a lot of the MSOs.
And if people want to read your stuff, Mitchell, can you remind us where we'd find that?
I'm on LinkedIn a lot, but I also publish under a Substack blog. It's called the Cannabis Management Review, and people can find that at mitchellosak.substack.com. And I publish 2 or 3 times a week. I follow you guys all the time. A lot of what I try and do is collate great thinking, either promote it myself under your banners, or try and add or elevate or complement some other great thoughts that are said in the industry among the 25%, which I will include the 3 of us in,
Flattery.
if not 10% for you guys.
And so, yeah, so I'm glad he brought up Rubicon because, yeah, that was a name. What I was saying, most disruption seems to be more on the value side. That was a name that popped right into my head because they do seem to be doing well in the premium space with people who care about, organic things, people who care about actually flower with taste to it, people who care about having, live resin or rosin vapes versus distillate vapes. But how big do you see that opportunity being, Mitchell, versus the value opportunity? Because the way I see the world is that Glasshouse, for example, which I have no affiliation with, guys, it's just an easy thing to referencing something big scale and value, is that they're trying to be the good enough solution. So someone may have an iPhone 12 and the iPhone 16 comes out and they say, wow, that iPhone 16 is really cool, but this works good enough for now, so I'm going to keep using it. Or the best-selling beer in America isn't some small microbrew. I don't know what it is today, if it's Modelo or Coors, depending on when somebody said something slanderous to another group. Used to be Bud Light. But you get the idea that that's for the masses. And so when I think about disruption, I think about accessing the biggest markets out there. I don't necessarily think of premium. I think about what is good enough for people, what's providing value, what does the everyday person want. So with that backdrop, that drives me to think that there's more opportunity sometimes on the value side. But do you think a Rubicon, and maybe there's an analogy to that in the US, can scale in the premium space that's really meaningful?
So that's an amazing question. And I'm going to bring it back to a great conversation you and I had, Jesse, in Chicago, where you dropped a lot of pearls of wisdom on me. And I politely pushed back in terms of market share. And I'm going to revisit that conversation to answer your question. So we did chat about it. And what I put forth back to you was I'd rather have a much higher share of the profit, of the available profit or margin in the industry, than a much higher market share of units sold.
Mm-hmm.
And what do I mean by that? The first job I ever had at Procter & Gamble in brand management, that company pioneered the creation of mass premium segments. If you look at Tide or Pampers or Always or Cascade, P&G products were generally not the best performing, almost close to the best performing, the highest margin, and the highest market share. So they found that sweet spot where the profit was, where you can get sufficient volume, and where you can build brands and loyalty among a target consumer base. I think in cannabis, or I hope that's two different things. I hope we can get to a situation where the premium segment or the mass premium segment, which will be smaller than the value segment, without a doubt, for sure, will have a much higher share or fair share of the available profit than the smaller, larger companies fighting it out for the pennies in the value brand. That's where I see Rubicon. I see other brands there. If you look at in Canada, Morgan, back to your point about the Tilrays and so on, those top 5 or 6 LPs as a share of the total market and their value brands on average are declining quarter over quarter. And those mid-sized brands, most of them are are premium or mass premium brands. They're increasing share. So Canada could be an absolute aberration. It's a very different market than places in the United States, without a doubt. But we're seeing the evolution of, I guess, a barbell kind of model where you might have mass premium with a big chunk of the market, value at a big chunk of the market, and maybe nobody in the middle. So in Canada, we're seeing that mass premium rising and the Tilrays and the big ones falling. That's an interesting dynamic from my perspective. And companies like Rubicon, and there are others in Canada that are a part of that right now.
Do you see what form factors lead to having that mass premium capability, or just, or what do you, is it flower, is it vape, is it pre-roll? Like which ones give you that? Are you seeing the companies like you're mentioning? What categories are they focused on to drive that mass premium adoption?
Okay, good question. Up until, well, it's probably still true now, but pre-roll has been driving a lot of that margin expansion, market share growth, differentiation. Pre-roll in Canada now is roughly 30% of the market. That includes infused pre-roll. I see that getting bigger for a convenience consumer access perspective, without a doubt. I see vape and vape derivative products also increasing substantially. They are primarily taking share away from bulk flower, but bulk flower is still a substantial piece of the business. The big, if you can ask me, what's the big operational and strategic challenge in Canada and maybe in other markets, well, for sure in other markets as well, is balancing your business, balancing that category and product mix. So if Morgan, if your question was alluding to how do you do that, I'm not sure there's a pad answer for everyone. I think you have to look at it on a company by company basis. But you essentially, for a lot of these companies, you have 1 foot on the gas, you have 1 foot on the brake, and you have 1 foot on the clutch, because some of these companies, including in Canada, have to always look at their product mix and their geographic mix and say, are we making money in these areas? And if you're not making money, you got to pull out, redeploy the capital and the capability to other areas where you are making the money. So it's like simultaneously three things happening.
And do you see the hemp beverages, look at the US market, Mitchell, as a disruptor or a complement? And just to unpack that a little bit, maybe we can look at Minnesota, as a test case. We don't have the answer yet, but they have these low dose beverages, 5 milligrams, and low dose gummies available everywhere on tap. That's on tap at breweries, at the grocery store, at the convenience store, at the liquor store. So you have the increased adoption perhaps from that. But if and when they ever get around to rolling out a state legal program, which now looks like about a year from now, I'm curious if that takes business away from the dispensaries, because people go, oh, I don't have to deal with the guard at the door, I have to deal with all the weirdness. I'm just going to buy the product here. Or does this bring a bunch of new consumers in that said, hey, I didn't really mess with cannabis before, but I sure do like this 5 milligram drink. Why don't I go see what it's like to try a vape or what it's like to try flower? So do you think that ultimately that the hemp beverages are a way in and increase cannabis adoption, or do you think that's cannibalizing?
I'm a guy with a lot of opinions. Some of them have facts. This is one situation where I'm going to hold off a little bit. We have to do this again. I haven't seen enough data to be able to definitively answer your question. I'm a data-driven person. I will say, in general, that I see hemp beverages and hemp derived THC as a potential Trojan horse for normalizing cannabis or intoxicating beverages. I'm a big believer in beverages. I'm sorry, Jesse. I'm with Morgan on this one. I think that's how we're going to get to the normalization of cannabis, or D9 or D8. But having said all of that, there's still a massive infrastructure, and there's still lots of people like you who like it the old-fashioned way. And the unfortunate thing I see about hemp beverages, for example, is that we don't have enough run rate data to be able to make a definitive choice. So I do consult to hemp beverage companies right now. I think it's the Wild West. I think it's like a tulip mania Dutch bubble that's going to blow up very quickly soon. If not, it's happening right now. I just don't know how to place the bets. And I wish I knew, because there's a lot of livelihoods and a lot of capital on the line here. I mentioned Curaleaf. A lot of those other companies have gotten into it, and others are looking at it. Like, how do you manage, identify, and mitigate this risk? I don't know. It's almost like a game theory problem when you think about it.
Yeah, and the lack of data is really interesting because we don't have, well, there's Agrify, which we haven't seen much out of, but we don't have any publicly traded hemp beverage companies putting out financials. So it's always a bit mysterious in terms of how much revenue each one is doing. What do those margins really look like? And also some of the stuff I see in terms of the variability around dosage in those cans, that some say 10 and it tests at 15, some say 10 and it tests at 5. And that's, that's kind of a bummer and a concern as well. So yeah, I think a lot of
I'll just say one other thing, which you don't see. Again, I'm an ex CPG brand manager, right? So I don't care a lot about trial. I care about repurchase. So is anybody, because I haven't seen this data, going back to the soccer mom or the former stoner or the guy like me who just wants to trial something, and seeing if they're actually going back and buying the product, and which product are they buying? Or are they going back into cannabis beverages, or are they going back to alcohol? Because I'm not convinced. I've done work in the wine and beer industry. I'm not willing to say those industries are dead. They're not dead. If you look at market caps, they're still doing quite nicely. Thank you very much. And everybody has access to all the same data that talks about how, millennials are moving away from alcohol. I'm not convinced of a lot of that, because a lot of the numbers that matter, like NASDAQ, like publicly listed data, doesn't show that. So I'm sorry to cut you off. I think we need to know a lot more about what's really going on here.
No, I think that's a good perspective. Morgan, in the spirit of time here, I know we need to get out at the end of the hour. Do you want to jump ahead into tariffs? I think that's kind of an interesting conversation, and we can hit that and grok and get out of here.
Yeah. Yes, we'll do. And real quick, I thought it was really interesting a point about, I agree on the alcohol side of things. Alcohol's been around for a very long time, just like cannabis. And it goes through cycles, right? And it made me, when you were saying that, it made me think about tobacco. And like, those tobacco companies were sleepers for years. No growth, secular declining growth, but huge cash machines. And now you look at them today, those stocks have been absolute dynamite because of the pouch category is absolutely exploding and has reintroduced massive growth for them that they haven't seen in a long time. So, I think alcohol probably could have a very similar cycle where it's going through a bit of competitive headwinds right now because cannabis is, garnering some share and some mental capacity as well. But I think they're going to find their way back to growth. I think, alcohol is something that's not going to go away, even though we all know from a health perspective, and the Surgeon General even coming out and saying like wine needs to have warning labels on it. But so good point. So one, the du jour is something we're all trying to get our arms around with for the implications around costs. Does this shift consumer behaviors? Like, how are you thinking about, or how are you talking with your clients about tariffs and margins and pricing, and like how are you trying to navigate through it with just such significant uncertainty? Are we done, or is there going to be more? Are they going to roll back? Like, how do you try to plan, and how do you advise companies to try to plan for capital with this backdrop? Or the opportunities too. I mean, I don't mean to just be on the negative side, but like what's the Mitchell view on that?
Okay, so the Mitchell view is, how long is the string? I will not predict or forecast what will happen when it comes to tariffs and what have you. it could be one of two worlds. It could be all a short-term bluster, and not only on behalf of the United States, but in other markets that in countries like mine that have retaliated. Or on the other hand, this could herald in, you know, I won't even say a new trade war, but back to the future. Back to a post-war, pre-Bretton Woods era where there were high tariffs everywhere. No one, I don't think anyone has a clue except for President Trump, and I'm not sure he even knows. So, what I will say is, what I advise clients, and I'm sure you guys do as well in your investments, is to build resilient, adaptable, businesses with fortress balance sheets, right? So, obviously, you can withstand supply shocks, cost increases from China, and so on and so forth, as well as interruptions. So, I'm not the first person, and I won't be the last person to say, do proper vendor management, diversify your supply, go to domestic suppliers. We all know that. What I'd like to chat about, because you brought it up, Morgan, is there a positive aspect to tariffs? And I think there are two of them, one short term and one long term. And this is a topic I just wrote about, I think, a week or 2 weeks ago. Um, I get a lot of direct messages in terms of the stuff I write from leaders at LPs and MSOs and government officials. These folks will never write anything publicly because of their positions and so on. But it was 50%, Mitchell, you're a complete idiot. Tariffs are really bad. And 50% was, that was a brilliant idea. I want to do it. What my idea was to use tariffs as a way to get your pricing up in certain markets through pricing tests. So what we've seen in every supply shock, and I won't lecture anybody on economics, but typically when there's like an oil price shock, or COVID was another example, when prices shoot up, many or most companies will out of sympathy or because their costs have gone up, will raise their prices. This is an old CPG trick. P&G did it all the time. Well, guess what happens? They go up, and then when the price of oil drops or supply increases, do you think the price ever comes down? No, it doesn't. Okay? So CPG companies and others love these kinds of economic uncertainties because they use it as an ability to take up pricing. Now, in cannabis, yes, the US domestic market is insulated, as in Canada. We don't have to worry about anything other than inputs. But in Canada, we're girding for price increases in what we've seen across the board in every B2C and B2B category. There's no reason why a cannabis retailer in Canada or in the United States can use this opportunity to take their pricing up a certain percentage as a test and see if there's in fact inelastic demand on some products or some categories or some locations such that they can rebuild their margins, which we all know are under distress right now. And if margin expansion is a strategy, there's really only way to do it. You do it through pricing or you do it through cost. It's hard to do it through cost, especially when your inputs are higher. Let's explore using tariffs as a way to get our pricing up.
Right. So that would work in. No, it's interesting. I mean, I think certain form factors would actually benefit the margin expansion perspective, right? So take pre-roll because it's just paper. That's a very limited input. But like we hear in the US, the hardware for the vape pens, those now cost 245% more than they did. So can you pass that entire cost in and raise prices, or is it just going to shift the consumer buying away from those where they have to raise it up to such a price to make it economical or make more margin versus other categories that are not going to have such a heavy input cost and then get the margin benefit from those categories? So again, it comes back to my, just from our conversation, pre-roll is a natural landing spot, or maybe just, flour in general, going into the Mylar bags or the jars. Are you thinking more nuance or just thinking wholesale, like try to, this is an opportunity to just step up the menu pricing in aggregate?
So I'm a big test, learn, reapply. So in some stores, I would do it wholesale and everywhere. In other stores, I would do a limited test. In other stores, I'd leave them as a control, and I'd read the data.
Yeah.
Like our industry does, cannabis does a really poor job of testing and learning in general. This is a great opportunity to do that. I would do limited tests. If it looks like our business is falling off, obviously you're going to reduce the prices. But what we do know about typical retail behavior of people, and I'm guilty of that, I go to my local cannabis store. I'm not going to start driving around to different stores that maybe save a buck on an eighth or what have you. So there is some inelasticity because consumers are creatures of habit, because they only live near certain stores, because they're influenced by a brand, because of the bud tender. I think it is worth a test. And that test can take a variety of different formats. But what's the downside? You know, you lose a week or 2 weeks in certain stores or in certain categories versus an across the board increase in margin. That's a gamble I would take any day of the week.
Has anyone that you've suggested this to implemented that? Yeah.
Yeah. Yes.
Has any early indications?
No.
Too soon?
No. And I have to say, ethically, I have an issue with this. I'm a Canadian. I'm a proud Canadian, although I spent a lot of time in the United States. My son lives there. I hope to be an American one day. I don't like taking advantage of Canadians because of U.S. tariffs that don't directly impact the price of Canadian cannabis, because it doesn't for stuff like flower. On the other hand, my costs everywhere for foodstuffs in Canada, for consumer products made in Canada, have all gone up in sympathy. Okay. And what you're seeing as well in Canada with Buy Canadian programs is that Canadian grocers are putting up nice signs that say, you know, Canadian made, and they jacked up the price. So look, they're getting a two banger out of that, right? Ethically, I have an issue with a lot of this, without a doubt. But I didn't create the laws of the jungle. We're in a crazy competitive market with 280E in the United States. The government has put tremendous headwinds against us, without a doubt.
Mm-hmm.
We need to explore creative ways, disruptive ways of clawing back that margin, if for no other reason that a lot of cannabis companies need to survive and thrive. And we know the debt wall's coming. We know what's happening. It's time for some drastic creative action, in my humble opinion.
And as I think through the categories, guys, I'm just kind of doing this on the fly, but it seems like the further you get away from flower and the more manufactured the good is in some ways, the more likely it is to be impacted by tariffs. And so if we're talking about, you know, a vape manufacturer and they're using, you know, the disposable vapes especially, but even the 510s, that seems like a big impact. I think Morgan, I don't know if it was online or offline, we were chatting about beverages and, you know, the cost of cans and things like that. There's an impact. Flour, depending on how you're buying it, there's the bags and the jars, pre-rolls, there's some packaging that goes there. We're way on the other end in that we sell bulk extracts to other brands. Are you guys getting some feedback?
Just a little bit, yeah. I'll mute just in case it's me.
We do bulk extracts. We sell things to other brands. So in terms of our business, we're not really touched by tariffs. But does that sound right, Mitchell, in terms of the vape, the beverage being maybe the most impacted and maybe less by the packaged flour and pre-rolls?
Yeah. So this would all fall under an umbrella of something I'll call strategic revenue or strategic pricing management. So obviously, you know, the crude way is to do it across the board and see what happens. But, you know, machine guns never, you know, deliver the desired results either when you're trying to just take out one person versus a lot of innocent civilians. So obviously a sniper rifle is the better approach here. And again, it comes back to, what does your data say? What is your product mix? Where are your stores? And to sort of use that sniper rifle to target the SKUs and the categories where you have the lowest volume risk and the highest margin potential. And that will be different for every firm. It'll be different for every geography, but there are countless opportunities to be able to do it. And again, this is not Mitchell's creative idea. This is a pretty standard CPG kind of strategy to maximize revenues in markets that don't grow by more than the increase in population and GDP, that are under constant margin pressure from powerful chains like Walmart. You know what they do, constantly driving down pricing. These packaged goods companies have to be very creative in terms of how they're able to drive up cost. If I look at the Pepsi or the Coke that I buy in 2-liter bottles in Canada, they're higher than they were in COVID, and the price of oil is 50% lower than it was now. So how did that supply chain cost retrench back to pre-COVID days, yet my product is 100% more expensive than it was before?
Yeah, I think that's good. I think that's good perspective. Well, why don't we head towards wrapping things up, guys? If you're a regular stock watcher, you can see that MSOS was up about 10% today as people got once again excited about this new was a States Act 2.0. Feels a little bit like Groundhog Day to those of us that have been around a little bit. But why don't we use that, Morgan, as a transition into this week's Ask Rock?
Okay. So I asked Rock, Representative David Joyce announces the state's 2.0 Act has been filed. What are the probabilities of this becoming a law that President Trump would sign, and what timeline? And Grok gave me a very thorough answer. So if anyone has Grok, throw it in there to get the whole thing, but I'm going to just give you a high level because it really broke it down. So estimating the likelihood of states 2.0 becoming law involves assessing legislative, political, and administrative factors. Starting with the House, strong bipartisan support and public backing increase the likelihood, but passage requires navigating a polarized Congress. So they give an estimated boost of 30 to 40% to baseline probability. Senate passage is uncertain but feasible if framed as a states' rights issue appealing to Republican federalism. So an estimate adjustment of negative 10 to negative 20% due to Senate gridlock risks. Trump's neutral to supportive history and deregulatory agenda suggests he might sign if Congress passes the bill, but his unpredictable nature and competing priorities add uncertainty. So the adjustment is 0 to 10%. Positive. Judicial trends support the bill's legal foundation, but administrative focus elsewhere is neutral. So it gave it a 0 adjustment there. Opposition groups, anti-cannabis groups, law enforcement, conservative advocacy groups may lobby against the bill, citing increased youth access and impaired driving. No news to any of us. Competing legislative priorities such as immigration reform, tax cuts, and deregulation could crowd out states 2.0 in a busy 119th Congress. So adding in the opposition agenda, reducing the likelihood, so a negative adjustment of negative 10 to 15%. So in conclusion, the States 2.0 Act has a 35 to 50% chance of becoming law signed by President Trump versus 20 to 30%, that's like the baseline for most bills, driven by bipartisan support, public demand, and alignment with states' rights principles, but tempered by Senate challenges, competing priorities, and Trump's unpredictable stance. A plausible timeline points to passage by March to April 2026 if momentum holds. Delays due to Senate gridlock, competing priorities, or extended negotiations could push this late into 2026 or early 27. If the bill stalls in committee or fails in Senate, it would not pass in the 119th Congress, ending in January 2027, requiring reintroduction. Jesse, you're on mute.
I'll take the under on probabilities and the over on time.
Spoken like a true cannabis person.
Yeah. And a good better.
Yeah, did those probabilities seem crazy to you, Mitchell?
No. I'm call me jaded, but until I see it, it doesn't exist. So I'm also, well, anyway, I don't want to opine on U.S. regulatory reform because I've been wrong virtually every single time.
Yeah, I think you're in good company there.
Yeah, and I intentionally wanted to ask a question today because obviously the stocks were up yesterday mysteriously ahead of the news on the Canadian side, and then the U.S. side was up today. But just want to put in perspective, like, remember the sauce making in this country in Normal times is 14, 15 months. In these times, who knows? And the challenge I have with this, I'm with you, Jesse. I think probabilities are too high. Grok was too optimistic. Appreciate the optimism, but we're going to be rolling into midterms, and we know that's going to be a dogfight. And I really struggle to see how any party is going to give either side a win or a give in that environment. So I have no idea. So again, unless Trump says, which again, I think Grok did a good job, the unpredictableness. If he says, get it done, then game on. But if he doesn't opine, then I think this is just going to hang out there for forever. Like safe banking has been around since 2014 or whatever, when it was whatever it was in this first iteration.
Yeah, they talk about the Masters, and I think in the Masters, the golf tournament, they say it's a tradition unlike any other. And I think that's gotten to be kind of like this in April, where it's just a tradition that we put forth some sort of cannabis legislation that's not going to pass.
Good point. 420 is just a few days away.
And last thing that we'll wrap here, guys. But for those of you that are interested in AI, like everybody I see in my life, from people like my mom to super sophisticated users of technology, are starting to use ChatGPT for everything from recipes to very complicated business analysis. And our CEO, Micah, shared with me this podcast. I passed along to Micah and Colin, because I know that, or not Micah, Morgan and Colin, because they like this kind of stuff. But it's on the What is Money show. And it's called How to Use AI to Change Your Life, AI-Driven Leadership with Jeff Woods. Again, What is Money show, How to Use AI to Change Your Life. And I'm about 2/3 the way through it, but it's completely reframed. Ways I can use the tool, prompts that I'll use, and how to get way more value out of it. So if you're into using AI in your daily life or your business, you might want to check that out. Well, Mitchell, my friend, good to have you on the show. Appreciate you joining us. First time. Hope it won't be the last time.
Thank you. I appreciate being included in such, and I mean this in all sincerity, with really august company in cannabis. There are a lot of wannabes in this industry, but very few people that I know with the depth and breadth of experience both of you guys have, operationally, investment wise, and I'm truly privileged to be part of this for the hour. Thank you.
Well, great. Appreciate the kind words, Mitchell. Morgan, always good to talk to you, my friend. Thank you all for listening. Thank you all for watching. Check out the YouTube channel, and we'll see you next week.
Thank you.
The views expressed in this podcast are provided for informational purposes only. Nothing we said should be considered research or a recommendation. All investing involves risks, including the loss of principal.